So hello everyone, welcome back to the channel. And first of all, I want to let you know that we have today the third part of the accounts MCQ, isn't it? And today we are again going to discuss 10 more questions for the accountancy, right? So before that, just let me know in the chat section if everything is correct or not, including my voice and as well as my camera, everyone. Okay, so I have started to get the answers ki if everything is correct here. Okay, chalo. So we have the third part, and let me tell you that you have to do your best in this session as well, just like the previous sessions we have covered, right? Okay, so the first question, let's start with the first question. The first question says, the sales income, credit and cash of a business during a given period is called what? The sales income, whether it is a credit income or whether it is a cash income, you have to tell me what do we call it? Transaction? No. Sales return? No. Purchase return? No. Profit? No. So what is the most appropriate answer here? It would be option number E, that is turnover, right? Okay, so let's move ahead. Now second question says, gross profit is the difference between. Now listen to the question and look at the question very carefully. It is not talking about net profit, it is not talking about operating profit, it is asking you about the gross profit. So we have trading account and the PL account, isn't it? In the trading account, the debit side we write all our expenses, and in the credit side, whatever is related to the manufacturing concern we write on the credit side, and all the expense we write on the debit side that are related to the factory, right? So if credit side is more, that is income is more, and debit side is less, that is expenses are less, so you will have your gross profit here, isn't it? So the question is saying gross profit is the difference between what? Net sales and the cost of goods sold, that is COGS, PAT, that is profit after tax and the dividend, and net sale and the cost of production. So I have started to get the answers, that's very good. And D option says net sales and direct cost of production, net sales and the dividend. So the correct answer would be net sales and the cost of goods sold, and I can see you all are correct here. Okay, that's very nice. Okay, so basically it is asking you about the trading account. In the trading account we get our gross profit, right? And in the debit side, what do we have? It's cost of goods sold. Okay, okay. Now question number 3 says, repair of a second hand machinery before it put to use. So what happens now, whenever you buy a machinery, a new machinery, whatever expenses you have incurred in bringing that machinery to the present location and condition as intended by the management to be able to use it for the intended purpose, all the expenses incurred will be included in the capital expenditure only. But right now in this question we are talking about second hand machinery, but the logic is same. We are buying a second hand machinery, but before putting that into use we have to repair that. It is not the normal repair and maintenance, right? So question is asking where you are going to include that, the expenses: capital expenditure, revenue expenditure, deferred revenue expenditure, prepaid expenses and accrued expense. So okay, so I can see I have got the answer. It is capital expenditure, absolutely correct. Why it is not the revenue expenditure? Because it is not the normal repair and maintenance. Please remember everyone, ki even if you are buying second hand machinery, but before putting that into use, whatever expenses you are doing, that will be included in the cost of machinery itself. Okay, that will be including the cost of machinery itself, right? So the correct option would be capital expenditure. Now fourth question says, accommodation bills are also known as what bills? Now what is this accommodation bill? First of all, see, we have normal trading bill of exchange, isn't it? And we have this bill, that is accommodation bill. So it is a kind of, you can say, financial aid. It is a kind of financial aid. Like I'll give you the example. First of all, let's understand what is accommodation bill, then I'll ask you what is the other name. So suppose you are here, you are A, okay, and your friend is here, that is B. Now your B needs some funds, right? And your friend B needs some money, and he's going to ask you ki, give me some money, but now you say ki you don't have money. But what you can do instead, you can accept a bill, and in this bill it will be written that this A, matlab you are going to pay your friend after 3 months, let's suppose 10,000 rupees. Sir, if no goods have been passed, if no services have been given, why you are just drawing a bill? See, in this case he's your friend and you don't have money to give him money, right? You don't have enough money to give B the amount. So what you are going to do, you are just going to accept a bill. He is going to draw a bill, right? B is going to draw a bill, he is going to give it to you. Now what will happen by that? See, B now holds the bill of exchange, a kind of bill of exchange that gives him guarantee that after 3 months he is going to get the 10,000 rupees. Now what the B is going to do now? B is going to go to the bank because he needs money right now, na? So he is going to go to the bank and he is going to discount this bill instantly, and thereby he will get instant money of suppose 9,800. The charges will be 200 for the bank, right? Now after 3 months, this bank, because now the holder of the bills of exchange is the bank, after 3 months this bank is going to ask for the money from the A itself, from you itself. So what you are going to do, you are going to first of all, your friend is going to give you the 10,000 back within 3 months, within this 3 months, right? And you are going to give this money back to the bank itself. So this is what accommodation bill is. It is in the accommodation bill, really no goods or services has been passed. It is just a financial aid. Have you got the meaning of accommodation bill? Now let me check the chat section ki who all knows the answer of this question. Okay, no one knows the answer of this question. Accommodation bill are also known as kite bill. Okay, they are also known as kite bill. Okay, just a theoretical question, but the concept was you need to understand the concept as well. Therefore we have discussed the accommodation bill as well. Okay, now question number 5 says, what would be the bonus share allocated if a bonus issue is in the ratio of 6:4? That means for each 4 shares you have been issued 6 shares, and the number of shares held by shareholders are 2,000. Very easy question. I think everyone would be doing this. So you have 2,000 shares, and out of 4 shares, that is, you are going to divide it by 4, right? 500, and you are going to multiply it with 6, because for every 4 share you are being given the bonus of 6 shares, right? So 5 6 is 30, so you have 3,000 shares. So let me check the chat section. Yeah, okay, that's good. Yeah, don't call it fake bill, Dhaval, but yeah, accommodation bill is like fictional bill, you can say, right? 3,000 shares. Very good. So yeah, everyone is correct in this question. That is question number 5th. Okay, let's move ahead with the 6th question. It says, theoretical question it is again, what is the Indian accounting standard for share based payment plan? Indian accounting standard 101 or 102, 103, 104 and 105. So the correct option would be 102, right? So share based payment plan is 102. Okay, chalo. Let's move to the 7th question now. 7th question says, which of the following errors will affect the trial balance? Now you have to see key out of these errors which is going to disbalance the trial balance. So basically trial balance is what? It is going to match the debit side with the credit side. So your debit side and the credit side should always remain equal, isn't it? Now it says if you have the errors of complete omission. So if you have completely omitted a transaction, that is your debit entry as well as your credit entry. So that means your trial balance is not going to get affected overall. Your total debit and total credit would be equal, right? And the question is asking which of the following errors will affect. So this is not the answer. Compensating errors. So again, compensating errors are those errors which are going to compensate with each other. That is, they are not going to affect the total of debit and credit, isn't it? So this is not going to be the answer again. Now, error of principle. See, error of principle, I'll give you the brief about the error of principle as well. Let's suppose you are the accountant of any firm, right? And you have bought a machinery, an asset. Now this is the capital expenditure, but you have recognized this capital expenditure as the revenue expenditure. Now this is a type of error of principle. Okay? But even if you have identified it as the revenue expenditure, then also you are going to debit that expense, isn't it? So total of debit and credit would be equal. Something is going to be credited, and you have done what? Instead of debiting the machinery, you have debited your expenses, but the total of debit and credit would be equal. So it is not going to affect the trial balance. Yes, so this is not going to be the answer again. Now let's come to the D point. D point says correct recording in the cash book but not posted to the ledger at all. So this is going to be the entry or error that is going to affect the trial balance. Why? Because in the ledger you haven't entered your transaction, and trial balance takes its balances from the ledger account only. That's why. So it is going to impact or affect the trial balance. So the correct option would be option number D, and I can see most of you are correct. Okay, that's good. Chalo. Let's move to the 8th question. Preference shareholders are dash of the company: creditors, owners, customers, debtors, promoters. So the most appropriate answer would be owners. Why? Because even if they are preference shareholders, or for that matter if they are equity shareholders, they are going to be the owners, right, of the company. So the correct option would be owners. That is option number B. Okay? Okay, chalo. Now let's talk about the question number 9th. It says contingent liability is a dash type of liability, that is an ascertained liability. Okay, so it is not a certain liability. Okay? Contingent liability is like unforeseen liability. It might happen and it might not happen. You don't know the amount, you don't know the due date. Suppose someone has filed a suit against us. We are the company, and someone has filed a suit against us, right, against our company. So the amount can't be determined. It is going to be decided by the judgment of the court, right? So option number A is not correct. An uncertain liability, but its amount and due date are determinate, no. An ascertain liability and its amount and due date are determinate, no. An uncertain liability and its amount and due date are indeterminate. So yes, option number D would be the correct answer, and let me check the chat section, and everyone is correct here. Let's move to the 10th question and the important question. Before that, I want to tell you again that we have this offer, maximum offer that we can give you, that is of 50% plus additional 25% offer we are providing you, isn't it? And this is the maximum offer we can give you, and today is going to be the last date. You are going to have this much discount on all our courses. Save Big is the coupon code you have to apply in all of our courses, that is SEBI, RBI, NABARD, Combo, Test Series, each and every course, right? So you are going to get that discount, that big discount of approximately 50% plus additional 25% would be your 63% flat. Okay, so this is the maximum discount we can offer you. Okay. So now let's move to the 10th question. It says depreciation on the depreciable asset is what? Tell me in the chat section what should be the answer. We are talking about the depreciation on the asset or in the machinery. Okay? Revenue expenditure, capital expenditure, no. Depreciation is not the capital expenditure. Deferred revenue expenditure, no. Both B and C, no. None of the above, no. So the answer would be revenue expenditure. Okay, let me tell you how you are going to identify in the shortcut method key which are your revenue expenditure and which of the expenses are your capital expenditure. So the expenses which you are going to recognize in the PL account, okay, that is going to be your revenue expenditure. But the expenses which is going to impact the balance sheet, okay, that is going to be your capital expenditure. It is the shortcut you can apply. So depreciation, you write it on the PL account. That's why it is the revenue expenditure, and most of you are correct here, I guess. No, not everyone, but most of you are correct. Okay, chalo. And this is the homework question you have, but this you are going to again write it in the comment section after the live session is over. ठीक है? So thanking you, and we are going to meet on the Monday itself because Saturday Sunday is off obviously. So we are going to meet in the on the Monday. ठीक है? चलो.